Okay, welcome back. You're with us here on Opening Fire. 65.14 on the Nifty, 10.5 points lower. Shashi Bhusan, a senior research analyst, institutional equities at Prabhudas Lilladher Private Limited. He's joining in right now. Shashi, thanks very much. Good morning. Prashant here. What do you make of what TCS has said and also sort of the backdrop is what Infosys said earlier? And are you changing anything in terms of your forecasts, etc., for technology companies?
No, barring currency angle, which might appreciate, which can take either way turn. I think in terms of demand environment, all these companies have maintained the status quo that next financial year is going to be better in terms of growth, whether it's TCS or Infosys. And our sense is that our ears to ground are definitely indicating that in terms of deal flow, in terms of pipeline, everything has improved over the last few quarters. If US recovery remains sustainable at where it is right now, definitely we will see the growth achieving mid-teens or maybe slightly higher teen for companies like TCS. The companies which have got weaker momentum till now, Infosys and Wipro, perhaps they will see low teen kind of growth in US dollar term for FY15. So we have not changed our view. The sector still looks attractive. The recent correction definitely gives you an opportunity to buy into the sector.
Fiscal, the big underlying thesis remains not just for TCS. I think TCS said it, but I think it remains true for most IT companies that fiscal 15 should be better than fiscal 14, right? That's the big driver.
Right.
How better, of course, is a matter of debate.
Right.
How much better?
So see, even if you look at the NASSCOM guidance, it's a few percent point, 1 or 2 percent point higher than what it was in the last financial year. Now you have to understand that these companies have gained or grown to a size where growing at 20% CAGR perhaps is difficult, because that kind of business is not available. Or the pie itself is not growing that much. Pie is perhaps either stable or seeing 1 or 2% kind of growth. What is driving growth in mid-teens for these companies are a drive through towards the offshore. There are some under-penetrated market. There are some under-penetrated service offering. There are some under-penetrated verticals where Indian IT companies are not present in big way. Those are the places where these companies are trying to make their headroom to, and that's what driving the growth for these companies. So quantum, there should be some pragmatism to the overall expectation from these companies. Our expectation is that these companies should able to do a couple of percent point better than previous financial year in terms of growth.
Yeah. So you're saying that temper enthusiasm?
No, come again with the question.
Now you're saying that control the enthusiasm. Be pragmatic. That's what you're saying.
Yes, I mean, perhaps the momentum will improve. If the recovery sustains at this level in terms of growth in either US, UK, or Europe, then perhaps we will see a better exit rate for these companies in FY15. Why this dampening in the expectation actually happened? Now this quarter tends to be seasonally weak, and there is no change in that stance. This is going to be a weaker than Q3. That's what TCS said. That's what Infosys said. In case of Infosys, that was conveyed that we will be more towards the lower end of our guidance. Had they said that perhaps our growth rate will be slightly softer than the previous quarter, the message was very much same, right? I mean, it's 0.2, 0.3% lower than what the previous quarter growth were in constant currency term. This quarter there is no cross currency tailwind. There is tailwind of only 0.2, 0.3 kind of for all the companies. So this quarter tends to be seasonally weak, but that came somehow as a surprise. The problem got compounded with the currency appreciation and the kind of FI flow which we are seeing. And yes, this sector was heavily owned because of lack of investment opportunity in other space, so which I think some of the money has flown out. That's the only thing. But otherwise, in terms of purely on terms of demand, if you ask me, I would say that the demand environment still looks healthy, and nothing has changed between month of January to the month of March. If there is anything, it's incrementally positive only.
Yeah. Which are your best picks there?
So we continue to like Infosys and Wipro. That has been our top pick for almost a year. We continue to see increased aggression in terms of sales bidding by Infosys. If you look at last couple of days, also they have announced 3-4 large deals, which is $100 million plus. So our sense is this is just a matter of when rather than if about this company's turnaround. So they have said that the first half is going to be slightly weaker, but our sense that it will be weaker compared to the peers, and in absolute term perhaps we will see the revenue momentum getting better in Q1 and further accelerated in Q2 for Infosys. In case of Wipro, they have very strong deal signing in the last calendar year. Many of those deals will start ramping up, or must have started ramping up in last 1 or 2 months. So they will achieve their growth rate. Q4 tends to be slightly stronger for them. So their growth rate in Q4 FY14 will be stronger than the peers. Moreover, so their guidance, which tends to be very, very anemic for Q1, will be slightly better this time. And our sense that is under-owned stock, and the upside potential in case of Wipro is much higher.
The mid caps, what do you like there? Anything that you feel strongly about, which has got the potential for?
So there has been recent price correction, very strong correction in case of Mindtree, some correction in Persistent as well. So our likingness for these two companies still holds. We continue to prefer Persistent Systems. We continue to prefer Mindtree. Our sense that for Persistent System, the revenue growth here will be strong. In case of Mindtree also, I think Mindtree would be the few companies which will report a better Q4 number than Q3.
Shashi, thanks very much for joining in. Great to have you with us here with that perspective, quick conversation. Appreciate it very much. Shashi Bhusan and Prabhudas Lilladher there. Let's take a very quick break. We are back in 2. The market is still down 14-15 points. Let's just put up oil marketing stocks very quickly. IOC, HP, BP, etc. They're all down 2 to 3% lower. We'll tell you why when we come back. And we're back in 2. Stay with us.